Hi guys, this is Tim Melvin of the Tim Melvin Deep Value Report and the Banking on Profit newsletter coming to you from down here in Central Florida. Starting to get chilly down here. Okay, we've had to actually wear shoes and blue jeans the last couple mornings walking the dog. Had those early morning temperatures down in the high 50s, low 60s. Very cold, thinking of buying a parka. Anyway, the oil route continues. What can I say? First time in 7 years, Brent crude is traded below $40, and it came down rather strongly today. So the rout in oil stocks is also continuing. It makes it it's difficult to hold these things, but here's the truth of the matter: as it falls, in spite of the fact that I don't necessarily want to, and I'm a little nervous pulling the trigger, we've been buying some oil-related stocks the last couple of weeks. They're just falling into that too cheap not to own classification. Now, I don't know when oil's going to turn around and go back higher. There's a lot of people making very pronounced, strong convictions around the street, in either direction, lower or higher, about the price of oil. I don't think they know what they're talking about. They're making guesses, but we'll see how it all plays out. Here's what we know in the oil patch right now. We know that ConocoPhillips, Saudi Aramco, Chevron, their CEOs, who should have, kind of a good feel for the oil market, have said that they think oil prices will be higher in 2016. T. Boone Pickens, bless his soul, is just staying with his $70 prediction by the end of 2016. Now, if he's right in 2016, I got to tell you, deep value subscribers are going to party like it's 1999 because we are going to make a ton of money and be just solidly in the black if that should happen. Don't know if he is, certainly hope he is, but here's what I'm seeing in the energy patch, okay? I'm seeing insider buying. I'm seeing some increased M&A activity. I'm seeing bankruptcy activity. There's been 18 drillers in the state of Texas alone that have filed for bankruptcy in 2015. Smaller marginal players, but we're going to see some more of that. I know that Andy Beal down at Beal Bank in Texas has been hiring bankers specifically to make and buy distressed energy loans. He usually only shows up when things are about at their darkest. So, yeah, we take a little positive feedback from Mr. Beal being active, even though he's on the debt side and not the equity side at this point in time. We know that I am seeing some 13D filings. I expected this to start months ago, and it's just kind of now where we're looking every day. We check the filings, and we're seeing more and more energy names where activist investors are getting involved and saying, look, stock's gone too far, too fast. You need to do something to build shareholder value. All of the quarterly reports and letters that we're reading from oil company executives are saying pretty much the same thing. They're focused on cost control, getting as much cost out of the capitalization and structure and everything else, so that they can survive until oil prices do in fact turn around. And this is going to be enormously beneficial, folks, because if you've got a leaner, meaner company and prices do start to turn, your earnings are just going to go through the roof, and so is your stock price. So this is a painful period for oil investors. We're doing a lot better than many of our value compatriots because we do not have an institutional mandate to stay fully invested or close to fully invested. We can basically do whatever the hell we want. So what we've done is hold a ton of cash in the deep value portfolio. We're still just shy of 50%, and that has it made us a little less volatile. We've lost a lot less than some of our compatriots that have been fully invested and also heavily in oil and resource stocks. We've also had some of the sting taken out because we've had some financial companies, some small REITs, some non-energy related companies that have actually done fairly well on the year. In fact, we'd be having a pretty good year if we had been able to resist the temptation to get involved in energy in late 2014, early 2015. We were way early. I said this when we started buying, okay? We looked at this on private equity mindset, 5 to 7 years. It's been 2 years, year and a half, really. So we got a long way to go in this. Now, if oil goes to 20, is it going to hurt? Yes, it's not going to be any fun whatsoever for any of us. I don't think it's going to happen, but I'm a lousy predictor anyway. So, do the Saudis have the fortitude to take oil all the way to 20? I'm not sure because the pressure from their OPEC partners and from outside OPEC like Russia is going to get tremendous as this keeps up. Iran and Russia in particular need the money. They need higher oil prices. So they're going to be leaning on the Saudis to knock this off at some point in time. Not sure how long Saudi Arabia can stand up to it. Not sure how long they can withstand the internal pressure inside their own government. To keep doing this because there are some cracks in the facade in Saudi Arabia. We'll see how it all plays out. We're one geopolitical event away from $100 a barrel oil. In case you haven't noticed, the Middle East is kind of a mess. I'm pretty comfortable with our oil positions. It'll hurt if it goes to 20. Will I make a lot of money if oil goes to 20 next year? And in 2020, we're looking at $80 to $100 oil. Yes, I will. So we've actually been buying. As I said, we found two quality net stocks in the energy space. Bought them both. When you've got a company that you believe has a high survival factor and they're trading at 80% or so of net current assets, you got to buy that stock. It may go down, but long term, I think you're going to be okay. All my stocks go down after I buy them. I don't remember the last time I bought a stock that went straight up. Anyway, we've been buying. We also, with all the noise around Kinder Morgan cutting the dividend, and of course they did cut the dividend by 75% today around the MLPs. They've been extremely weak. Their core shareholder base was income-oriented investors, and those folks have just been running for the hills and dumping these things. So as we looked around, we found energy closed-end fund that was trading at a substantial discount to its net asset value. So we were buying cheap stuff at a bargain price. So we added some of that early this morning, as a matter of fact. So feeling pretty good about our energy positions. We've got the operating companies, we've got some drillers, we've got some service companies, we've got some suppliers, and we now have a couple of heavily discounted closed-end funds. Oil goes back to 60, 70, $80 a share in 2016, 2017. We are going to be some incredibly happy campers. With a lot of these, oil just needs to stop going down, and we're going to be pretty thrilled about it. So I like where we are. We own a lot of energy-related stocks. I think we're going to have a great 2016 as oil prices recover. So that's kind of where we are. It's, I call it the buy, puke, hold on method of investing. We've been buying energy. It keeps going down. It's just hard to look at that account balance some days. Now we have the offset of the community banks, and that's really helped quite a bit because we're actually, you put everything together, we're having a pretty solid year. The oil portion is very hard to look at. So anyway, buy, puke, and hold on. That's our approach to oil stocks. It's worked with us before. It reminds me a lot of buying technology bonds back in 2002, small REITs in 2009, and then when we started getting back into the small banks in late 2009, 2010. The world was going to end. Everything looked cheap. So we bought, we puked, we held on. We ended up making quite a bit of money off the deal. So that's kind of where we are with that. Now, let's see. Okay, right now, the only place really that we are finding any value is in this. Sorry, I'm distracted. There's pork chops on the grill downstairs. It's killing me. We got to wrap this video up. Energy, the small bank space, some smaller REITs, really the only place I'm finding much value, continuing to hold high cash balances simply because we can't find any situations that we feel comfortable putting it into at current levels. There's stuff that we like. It trades at 2 times book and 25 times earnings. We just got to be patient there. Really want to be in the cybersecurity space, and in the next market meltdown or correction, we're going to direct some money that way. We love that business long term. We just can't justify paying the current price. We love infrastructure, and that's a little closer than the cybersecurity stuff, but it's still not down to the absolute cheap levels where we want to be involved in it. We know infrastructure spending is going to be huge over the next decade. It has to be, not just here in the United States, but in other parts of the developed world where the great global recession has put a lot of water, electric grid, roads, highways, bridges, a lot of that money has been delayed. Eventually, you have to find that money and spend it because you're going to need new. There are maintenance costs. You have to pay the bill sooner or later. So we watch those stocks like a hawk, hoping that they will fall. We have a list we know which companies we want to buy. It sits right on the desk every single day. And if we can get a market correction steep enough, we'll be buyers of them. For now, we're buying energy as we find stuff that is just so absolutely cheap I'm going to puke whether I buy it or puke whether I don't buy it. It's that cheap. We're going to buy those. We're going to keep adding them to the portfolio. We have a heavy emphasis on balance sheet safety, so we feel pretty good about them long term. Community banks, it's just party time, guys. I mean, we're in the sweet spot. M&A activity is going to pick up next year. You've got bubble banks being created now. That's banks who are getting over the $1 billion asset mark so we can survive. But to get to the really thrive points, you got to get to $3 billion. No organic growth in the system. The only way to grow, first to the billion survival level, then to the 3 billion party like it's 1999 level. That song was on earlier, in case you can't tell, it's stuck in my head. You got to get to 3 to 5 billion spots. So you need lots of M&A activity. We're still seeing stronger loan growth in the smaller community and regional banks than you've seen in the bigger banks. So I think it's going to be a great year in 2016. We're still seeing activist filing. We're seeing positive insider activity. Everything under $1 billion is for sale, in my opinion. And there are just some tremendous bargains, quality banks down there with activist involvement, trading at 75 and 80% of book value. And we're just going to keep buying them. And when you put all it together, by the way, I made you all this offer this week. It's good through the end of the month. Deep value we're extremely excited about because we do think sometime in the next year or two oil prices will in fact go back up. Demand is actually growing out there in the world, and we're going to run out of places to store it. So eventually production is going to get cut back. Prices will go higher, and we're just going to make a lot of money when that happens. So 1 year of deep value, you get our energy picks, our net stock picks for 30% off at $279, I believe was the price. We're going to give you a year of banking on profits monthly so you can learn more about the trade of the decade in the community bank stocks. If you're already a believer, then of course, the banking on profits regular edition with the guided portfolio, which having a strong year of almost 20% and 72 stock picks. No losers. Okay, we've had just some very impressive wins in the portfolio, so that remains at the $1,000 a year level. So that's kind of where we are. But you should definitely at least take advantage of my 30% off of the value and a year free of banking on profits as we go into the new year. You'll be positioned in the right stocks at the right time for the right price. Since it's Christmas time, we're going to be generous and give you some money off. Okay, now books. I told you guys last week about the Randy White Hawker series. I have read 5 of them so far. Haven't watched a lot of TV this week, in case you can't tell. And you know what? They're easy to read. They're fun to read. They remind me a lot of the Travis McGee books. If I still lived in the Northeast, I would call this Snowy Day books. But instead, I'm in Florida where we don't have snowy days. So I'll say these are fun action-adventure books to read that are better than most of the crap that you see on television each week. So nothing monumental here, but they are a lot of fun to read. If you like Travis McGee, I think you will like these books as well. Now, one more serious book that I've been reading this week is The Search for Wisdom from Darwin to Munger. Buy the book. It's fantastic. It's incredibly eye-opening, thought-provoking, and all the things that you want a nonfiction book to be. It's a little pricey at $40, but you can get it on Amazon, and I highly recommend that you do so and read this book. It's been a very eye-opening book and an intellectual exercise for me, and I'm about halfway through and loving every bit of it. So buy the book. Okay, now what's the big news this week besides oil? Army-Navy this Saturday. Looking for a huge performance out of senior quarterback Keenan Reynolds on the Navy side. Having grown up in Annapolis, guys, I'm a natural Navy fan. I grew up, in the 70s. There was no 9/11. We had free access. We played football on the field, swam in the Naval Academy pool. The midshipmen were always great to us. We played basketball on the basketball courts. We used the boxing gym. It was just, we ran all over the academy. I'm a huge Navy fan as a result of growing up in the Annapolis area. So we're looking for the 14th win in a row over Army. I think it is a crying shame that a true student athlete and future naval officer Keenan Reynolds is not in serious consideration for the Heisman Trophy. He certainly should be. He set all kind of NCAA records this year and is the all-time NCAA touchdown leader. This guy should be on the podium in New York, and he's not. And I say, shame on you, NCAA. But anyway, Army-Navy this Saturday, always a fantastic football game. Hope you can make time to watch it. I know I will while I'm putting the new Banking and Profits monthly newsletter edition together. I will be watching the Army-Navy game this weekend. Anyway, that's all I got down here. Oil prices will probably go lower over the next week, so we can chat some more about this next week. But I've got to go get those lamb chops, guys. It's time. Have a fantastic week.